The UK is broke. They don't know what to do with this Bitcoin. They're going to sell it. My thoughts are, okay, it contrasts pretty strongly with the US, who has claimed or stated that they're going to take whatever confiscated Bitcoin they have and use that as the basis for their Bitcoin strategic reserve. So the UK is not on that bandwagon. Welcome back to the weekly for July 28th, 2025. I'm Graham Stone, joined by David Sencil. It's been another eventful week for Bitcoin, macro, and crypto. So let's get into it. David, as the rest of the world is stacking Bitcoin in the face of another huge monetary expansion, tell us about the UK's desperate move to dump their Bitcoin holdings.
Exactly. So the UK Home Office is preparing a major sale of approximately 61,000 confiscated Bitcoin that currently is valued at over 5.4 billion pounds or $7.23 billion. The bulk of this stash comes from a 2018 law enforcement raid tied to a Chinese investment fraud. I actually would like to know a little bit more on the background on this. I think it's probably a good story. In any case, this fraud alone yielded 61,000 Bitcoin. To manage and sell these assets, authorities are developing a centralized, quote, crypto storage and realization framework. The contract for managing the sales could be worth up to 40 million pounds in commissions. And this is all according to the Telegraph. First thing this brings to mind, Graham, is it's reminiscent of what Germany did in the recent past when they just market sold a crap ton of Bitcoin. I think
about
Bitcoin
a year ago,
was at,
right?
yeah, I think Bitcoin was at like what, 35, 40K at the time, something like that. And in retrospect, it looks like Germany's actions were incredibly stupid. Now, this might be a little different, perhaps. And the question is, should the UK be doing this? Would it be smart for them to wait because we're in a bull cycle? So let's just go through some of the motivations for why the UK is doing this now. And again, these are all like kind of speculative motivations. They haven't been stated explicitly by people in government. Number one, you have fiscal needs. There's a big fiscal hole in the UK, with reports suggesting up to 20 billion pounds shortfall that the Chancellor Rachel Reeves must urgently address. The political timing is important in this respect. The Labour Party is newly taken power, and they need to show that they have competence, that they can make and do actions decisively, like addressing this fiscal hole. There's also like a risk management component. So they've been holding this Bitcoin for quite a while, and that has ongoing legal fees and security custodial fees. So this framework, the crypto realization framework, will help with that regardless if they sell it or not. So, I mean, there's that. And then there's apparently the government is worried that the longer they hold this, the more Bitcoin that they'll lose from this confiscated Bitcoin. So like people can claim that they were victims of this fraud, and then they can kind of claw back Bitcoin as time passes by. And then there's the kind of expertise on this. A lot of people, including myself, say things like, oh, well, Germany was stupid for doing this. But the government is not really in the business of timing the market. And so Bitcoin has appreciated a lot in the past year and a half. Why not realize some of these profits or all of them now? Why wait longer? That's not the job of the government to maximize profits. Those are the big reasons for why they might be doing this now. I don't know. Do you have any thoughts on this, whether this is a good move or a bad move? And then I have one more question for you, kind of more of a philosophical question.
To summarize, the UK is broke. They don't know what to do with this Bitcoin. They're going to sell it. My thoughts are, okay, it contrasts pretty strongly with the US, who has claimed or stated that they're going to take whatever confiscated Bitcoin they have and use that as the basis for their Bitcoin strategic reserve. So the UK is not on that bandwagon, it seems. That's, to me, the big takeaway here.
That's roughly correct. I mean, they can always print more money. I think they're probably traumatized by the so-called Liz Truss moment a couple of years ago. And so they'd really rather not have a repeat of that. And so I guess this is a better way, but it feels like it's a Band-Aid, right, on a bigger problem. This is a one-time thing. They sell it, and that's it. So again, the whole point of Bitcoin. And this goes to the more philosophical question about this. It brings it up with like a lot of things. I know you're about to talk about it too, but the idea of selling your Bitcoin for profits, or in this case of a government selling assets to support government function, that seems to me like what this would be for, right? Eventually you have some asset, and then when you need it, right, you need to use it for something, then you sell it, and then people are like, look, you did something good. You held onto an asset, and then when you needed it, you used it.
Yeah, fair enough. I mean, that's understandable. That's why we invest in Bitcoin, to later be able to use it to like increase our purchasing power. But I mean, can't really fault them for that. However, you could say that they're not taking a long enough view of this, and that they're just going to regret it. They're going to end up buying back in later at a higher price. If Bitcoin just keeps growing and it eventually becomes something that central banks by default sort of hold on their balance sheet, kind of like gold, that this could in the future be seen as a big mistake.
Yeah, I won't push back to that or like go into it more, but I'll let you get to the next story, because that also kind of ties into what we're talking about.
So they're going to sell this. Looks like they're probably going to sell 60,000 Bitcoin or something. And then, as a Bitcoiner, you're like, well, what is that going to do to the price of Bitcoin? And apparently not much, because people may have heard in the last few weeks, there was this OG whale from more than 10 years ago who had 80,000 Bitcoin. It suddenly woke up, and it's worth like $9 billion. They sent it to Galaxy Digital, which is an OTC desk for liquidating your Bitcoin. Now it's come out that Galaxy actually did sell the Bitcoin. So the transaction has been completed. The price of Bitcoin didn't tank. So it seems that the market is able to absorb a larger amount of Bitcoin than what the UK might sell here. So probably not going to hurt your bags if you're a Bitcoin holder.
Yeah, you could see the effect of this selling on the charts, right? Like Bitcoin's going along, and then suddenly there's this like dramatic. It only fell 3%, but it's the short time frame in which it sold. But yeah, so the market absorbed it easily. The question is, though, on crypto Twitter, you saw a lot of people, Bitcoiners and even just kind of agnostic crypto folks, saying like, "This is so stupid. This whale is an idiot for selling 80,000 Bitcoin. What an idiot!" Now, I mean, is he? Was this a stupid thing to do? To realize profits after 10 years for $9 billion?
Not at all. I mean, that's more money than you could ever imagine anything to do with. So, of course not. It's totally fine to sell that. But it's a different story, I think, if you're a country where like $60 billion is like whatever. But it could be worth much, much more in the future. So, I don't know. It seems a bit short-sighted.
I think to me this goes on to the more deeper point, though, of you have this maybe one of the oldest memes in Bitcoin land, which is HODL.
Yeah.
Don't sell. Never sell.
Yeah.
But that really, this kind of stuff here, like we're talking about now, kind of goes completely against it, right? Like here's an ancient whale and he's selling for
yeah. Well,
profit.
don't sell until you've made it. Isn't that the meme? if you've got what is it, $9 billion, you've made it, so it's okay to sell.
Yeah, but I mean, why wouldn't you hold for another 10 years and have $900 trillion?
Because like I'm saying, $9 billion is already more than it's possible to spend.
Yeah.
What's the point in holding it for longer? Yeah.
Right. No, I hear you. So yeah, I mean, I don't have a problem with this, but I feel like this, when you see kind of OG Bitcoiners, and this person is definitionally OG, right? Whoever sold this 80,000 Bitcoin, sell this much. It kind of really goes into the face of a lot of the kind of the OG Bitcoin maxi space thing of
I don't know,
hodling
I think
forever.
Yeah. No, I think it's bullish, because if this OG held for another 10 years, it starts to become systemic at that point. So it's better he just like distribute it to new holders at this point.
I think this is absolutely bullish, just because of how little impact it had on the price, and that alone makes it bullish. Udi had a really good tweet about this and how it's really, really important for old holders to sell to new holders, and more importantly, having new holders who want to buy at current prices. And how incredibly bullish that is, because then obviously the new holders are way less likely to sell because they want to realize profit. And so
Yep.
if you can get this turnover like once a price generation or whatever, it's incredibly bullish. And this would kind of fall in line with that, which is this old Bitcoin holder was able to easily find people who wanted to buy at the current price, like quite easily.
And it seems that this around $100,000 level is the level at which some of these OGs are like, all right, it's time to pass on the torch, and we're getting that turnover, which will enable a new generation to then cash out at $1 million.
What else do we have in Bitcoin news, Graham? Anything else?
let's go on to the Bitcoin Treasury Company roundup. So another week, another strategy perpetual preferred stock issuance. So on July 25th, Strategy announced the pricing of its initial public offering of 28 million shares of STRC stock at $90 per share. So it's not finalized yet, but it's expected to close tomorrow, subject to closing conditions. And Strategy estimates that the net proceeds from this will be 2.47, almost $2.5 billion after deducting the underwriting discounts and commissions. This whole perpetual preferred stock thing, it's pretty confusing. STRC, this is the latest one. It's their fourth perpetual preferred stock issuance. The three before them totaled $3.5 billion in funds raised, and this one is $2.5 billion alone. So in total, that brings it to $6 billion raised. Now, trying to dissect how this actually works. So from an investor perspective, why would you buy this stock? So you buy this stock to get the dividends. The way it's set up is that the stock is designed to be stable at around $100. If the price of the stock goes above $100, then Strategy will lower the dividend, which should bring the stock back down to that stable level of $100. If it goes below $100, they raise the dividend to bring the stock price back up to $100. The target is around 10% dividend. So you can look at it kind of like a money market fund or like holding treasuries, except that with treasuries, you're getting like 5%. You're getting 10%. So that's sort of the how investors would look at this. Then the question becomes, okay, well, how is Strategy paying for this dividend? Where does the dividend come from? And the answer, as I understand it, is twofold. One is leftover cash from the raise itself. So they may not use all of the money they're raising to buy Bitcoin. They'll maybe leave some left over to pay the dividends for a while. And then two, the more important one, I think, is future perpetual preferred stock issuances. So the next time they issue one of these, they're going to get more money, and that's going to be used to pay for future dividends. So I don't know. When you describe this, it does seem to have Ponzi adjacent characteristics, as you've noted here.
Yeah, this is a slide from Strategy's own materials, and they've put their entire stock equity structure into a pyramid. I mean, they've got to be trolling, right? Like this is so obviously meant as bait to get people pissed off, right? To get attention. It has to be, right? Because they've got like a Ponzi pyramid scheme kind of thing going here, and then they put all their structure into a pyramid.
Yeah.
And as I said in the post, this kind of makes sense when I was listening to Jordy Alexander on Steady Lads talk about how a lot of this, maybe most of it, is based on attention. Good attention or bad attention, it doesn't matter as long as the stock or the stocks or whatever they have is getting attention. They can trade against that attention, either up or down. And so when you have Ponzi adjacent mechanics, and then you put it into a pyramid, and then I think this is from the FT, the article that's quoting this, and you can see how kind of outraged they are about this. Then it makes this kind of makes sense. But at the same time, though, you still have to kind of scratch your head and be like, how Ponzi like is this though? Seriously.
Yeah, I do think it can draw in a lot more capital to it. In other words, it can be a source of funding for a buyer of Bitcoin for quite some time. There's a lot of
Yeah.
availability for that, and it won't necessarily in the end result in Strategy having to spit out all of its Bitcoin back into the market. But what it could result in is people who buy these perpetual preferred stock offerings getting wrecked, because if you look into the fine print of how these things are structured, there's no guarantee of a dividend. Strategy could just turn off, like raise or lower the dividend at monthly intervals. By the way, traditionally, perpetual preferred stock offerings don't have such flexibility. It's more like once every year or once every 2 years they can change the dividend rate. Well, Mike, with Strategy, they're doing it. They have the ability to do it like once a month to change the rate. Basically, they can just turn off the dividends, and in order to save them from having to sell their Bitcoin stash. So the risk really is, I think, for investors buying these perpetual preferred stock offerings.
Yeah. We were talking about this, trying to see if there was like systemic risk. I agree with you. It doesn't seem like there is. It's just retail is going to lose money.
Or not. I mean, like as long as Bitcoin keeps going up, which Bitcoin never has 80% drawdowns. Never happened. So it's not going to happen. It'll be fine. All right. Let's move on. Let's move on. Yeah. So continuing on our Bitcoin corporate treasury roundup, what else?
Exactly. Here we have Mara, the Bitcoin mining company, announced plans to raise $850 million through a private offering of zero coupon convertible senior notes due in 2032. The company may grant an additional $150 million option to initial purchasers, potentially bringing the raise to $1 billion. They already are a significant holder of Bitcoin in the space, so this would just be additional Bitcoin to their balance sheet.
Yeah, Mara's number 2 behind Strategy. And we have a new entrant, it seems, in the Bitcoin corporate treasury space, and this is Tokyo-listed AI firm Quantum Solutions, announcing a few days ago that they have an ambitious goal to hold up to 3,000 BTC within the next 12 months. And what I find interesting about this is the company specifically in their release notes here, they're saying that BTC's recognition as digital gold and its growing appeal to companies and institutional investors in light of the weakening yen and international financial instability. So they're holding Bitcoin because of the global macro challenges, basically. That's interesting.
Just as a side note, it sounds so funny, the kind of not word salad, but the buzzwords in that. Right? AI solution provider Quantum Solutions is getting Bitcoin. I mean, you've got all the big narratives right there, Graham.
Yeah.
AI, quantum, Bitcoin.
To your attention point.
Exactly. Yeah. All right. Well, speaking of Japan and the weakening yen, let's talk about that more. So the Bank of Japan is injecting USD liquidity. They quietly announced this last week, July 17th, that they would supply US dollar funds against pooled collateral. This basically means that they're providing dollar-denominated loans to counterparties backed by pooled assets. Analysts believe that this is kind of a big deal. This is more than a routine liquidity management. It's interpreted as an early sign of systemic dollar liquidity stress and potential central bank coordination ahead. So let's talk about why. Now, first of all, this is a foreign central bank, as in not the U.S., and looks like they're trying to support private markets for USD liquidity. So again, not normal. The BOJ's actions come amid increasing global demand for US dollars. The US, interest rates are still elevated, and the yen is weakening currently. This can be caused by a bunch of things, but political uncertainty in Japan is there too. Japanese yields on their sovereign bonds is very high. Japanese institutions, especially banks and insurance firms, have heavy exposure to U.S. treasuries, and they finance these U.S. treasuries with yen-based liabilities. So as the dollar strengthens, this increases their hedging costs. So there's like a mismatch there. Central banks usually prefer to use domestic currency, i.e. in this case, the yen, to do operations. So the fact that they're doing this in dollars is kind of a red flag. And the usual way that central banks, including the BOJ, provide dollar liquidity is through traditional mechanisms like swap lines or interbank funding. The fact that they're doing this in a different way is kind of also a sign that there might be a problem, but they're reluctant to go to those traditional mechanisms because those are quite like loud red flags. This all suggests that the stress is in private sector channels for dollar funding and not with the central banks necessarily. So analysts have called this covert easing or stealth intervention, and it seems to be a sign to markets that they recognize this problem and they are quietly trying to respond to it. Arthur Hayes interpreted this as foreshadowing global monetary easing. He published, I think, a blog post on this. He believes that the BOG liquidity operation is the opening salvo of a global monetary easing phase. These kinds of phases will, of course, boost assets like Bitcoin, which are incredibly sensitive to increased liquidity. He calls it, quote, a pivotal macro development for crypto markets. Quote, this is huge.
Yeah. And I think for quite some time now, a lot of people have been predicting that there's going to be not quantitative easing, quantitative easing. Quantitative easing under another name. And it seems like this might be an example of that. Effectively the same thing, but they can't call it quantitative easing because everyone knows what that means. So that they sort of sneak this in. It seems like that's something along the lines of what's happening here.
Yeah, I would say just in general, as kind of like a rule of thumb, when you start to see non-U.S. central banks or institutions give dollar support, U.S. dollar support, that should always kind of pique your interest, because that usually means that there's someone somewhere that wants dollars but is having trouble accessing them. And when that happens, it usually means that it's becoming potentially a big deal.
All right. So supporting this theory that Bitcoin and crypto markets are about to explode due to basically increasing global monetary supply, we have this narrative has basically grown. It's widely accepted now in crypto, and you see threads all over Reddit and everywhere tracking the global M2 money supply and noting how it correlates so closely with the price of Bitcoin. So global M2 money supply just reached a new all-time high of $96 trillion, and it's projected to grow 8 to 10% through 2025. Basically, people are predicting that not long after the global monetary supply increases, you're going to just see an increase in the price of Bitcoin. Take it for what it is.
Yeah. I will point out that people like Lynn Alden and some others have talked about that these charts shouldn't be followed on like a day-to-day or even a week-to-week basis. It takes more time, and they're not that tightly correlated on a low time frame. So you see a lot of chart people who show like daily increases or decreases in the monetary supply and predict price swings and stuff like that, and that shouldn't be done. Right. It's more of a general long-term, long-term trend.
Historically, the price of Bitcoin tends to lag the global M2 money supply between 2 weeks to 3 months. So if you see the global M2 money supply tick up dramatically somewhere between a month and 3 months later, you can expect the price of Bitcoin to follow.
Exactly.
At least historically, that's how it's been.
And it could go down. And it could go down and then up or whatever. So it's you shouldn't be doing any kind of short-term trading based off of these things, I think. Okay.
All right. Should we talk about stablecoins for a minute?
Just briefly, because I feel like we've been talking about these so much recently with the Genius Act being passed and the lead up to that. But one story. So the U.S. government via the SEC has declared stablecoins are now officially recognized as an integral piece of the financial future for the US. This is seen by some as kind of like a historic moment where you have the SEC, one of America's leading kind of regulatory bodies, not just talking positively about some kind of crypto related thing, in this case stablecoins, but talking in such terms as fundamental to the U.S. financial system. So just think about where we were a couple of years ago with Gary Gensler and how antagonistic it was. I mean, and all the kind of spurious lawsuits and everything. And here we have, just a short couple of years later, the SEC chair, the regulatory body of this stuff, talking about how this thing is now integral to the future of America. It's quite a turn. So just to briefly go over that, right? We have legal clarity now. This is all in terms of stablecoins, right? Before this, the laws were fragmented state by state. Now you have a federal legal framework for this. This stablecoins were viewed and often lumped into shadow banking. Again, now they're officially acknowledged. If you recall, they were treated as risk-prone innovations. There was a whole thing with banks having to have liabilities for it against it, which made banks not be able to touch it. Now that's not the case. SEC was litigating the heck out of this. Now it's not. So what a turn.
It's good to see.
Yeah.
All
definitely.
right, let's close things off for the week with a little pump dump action. So we've talked about the biggest ICO of the year, third biggest ICO ever, the pump token sale, which raised a ton of money. David, what else do we have here? I mean, it's crashed basically.
Yeah. Right. So leading up to the ICO, again, just remember how they had a private round, then they had the public ICO, and then afterwards you had the futures market was live before the actual token made it out, and then once the token was released, it was basically a short pump for 2 days and then down only to now. So I just have a couple updated thoughts on this. I don't know if you recall, but leading up to this public ICO, so many people on crypto Twitter with influence and money, they probably got into the private round, I imagine, and they praised the heck out of this thing. The ICO sold out in 12 minutes. Again, lots of high fives and patting themselves on the back on the timeline. And then when it went live and it started selling off, you had the usual thing, which was so I listened to a lot of podcasts this weekend while I was moving. And I should have marked down how many times I heard this. Well, if you're a fund and you're up 20%, you're up 30%, you have a fiduciary responsibility. I heard that line so many times, fiduciary responsibility to sell. And so that was like the excuse du jour this past weekend to explain the drop in the price, right? That these funds have a fiduciary responsibility to sell. Okay, we get it, everybody. They have a fiduciary responsibility to sell. I get it. So anyway, price is down. And still, I feel like the crypto people on CT with influence and insider knowledge and know-how and all this are pretty supportive of this still. So it's low, and I don't know if it's basing yet, but I do think it's going to pump at some point because there's still too many people, I would say most with a lot of influence, who are supporting this. I don't know what your thoughts are.
I don't know. I mean, look at this tweet from Mike Ippolito, who notes the less than stellar metrics of the pump ecosystem. Basically, all the numbers have been down for all of the entire year. So we have like total volume traded, number of coins graduating from like on their bonding curve, all down bigly. And, it's, as we talked about, this business doesn't have a moat. Meme coin trading in general is on the decline. Is it worth what even now? What the market cap of it now is
like 900 billion
or something. Yeah,
900 billion.
900 million.
900 million. Yeah.
It does look like the chart is showing some support here at the 800 million level. So something to watch, but I don't know. I don't think this is going to be a fast runner in the next alt season if we get one. So I'll probably stay away from this token.
Yeah. I think you're mid-curving it on fundamentals.
Yeah,
You're
exactly.
mid-curving on fundamentals because
Just all
everything
about
you say,
attention.
exactly. Everything you say makes 100% sense. And when I hear you say it, it makes me not want to get into it. But then I listen to all these podcasts with people that I've been listening to for years, and they have a lot more money than me and influence and attention. And they all are bag holders, every single one of them.
Yeah, so
And they're all saying,
should you listen to what
still,
they're saying? Like they
Yeah,
just want
because
you to pump their bags, don't they? So
they do, and I think that
yeah.
I think they're going to pump their own bags. Is what I think.
They're gonna do what's needed to like
Yes.
shift the narrative
to
in their
exit out of
favor.
this. To exit out of this, yeah, that would be
Yeah.
my guess. That would be my
Okay,
guess.
yeah, that's a good investment
Now-
thesis. You can roll with that.
Now there is I can take the other side to this because a lot of these people, and I still remember this because I was burned by a lot of these people, were pumping Arbitrum 2 years
Yeah.
ago,
And
I
Tau.
fucking bought Arbitrum like an idiot, but because I didn't see the unlock schedule, right? I didn't see
Yeah.
that it was just like billions of dollars of unlocks over like a year, and so Arbitrum was down only. This is different though. There are no unlocks. It was unlocked from minute 1,
Yeah,
minute 0, and so I don't think you have any overhangs like that.
except for the 40% of the supply that's owned by the team.
Yeah, but they have it unlocked immediately. Like they can. I'm
Right.
I'm sure they were part of the dumping.
Yeah.
Yeah.
Well, that is a pretty big overhang when the team has 40% of the supply, isn't it?
Yeah. No, it is. Also, I mean, yeah. So there are a bunch of different things. Like there's also equity holders, right? Like there's an actual company here, and so if you have the equity, why not buy the token and then also dump the token? So I don't know. Anyway, I do think though, just the amount of attention that people with influence are still giving this, I think it'll be worth a pump or two.
Well, yeah. I mean, if the narrative shifts and we get an alt season, then this token will be sort of at the top of a lot of people's lists, like just the attention game. Okay, what I got $100. What am I going to pump? I guess I heard about it. It was on like all these shows. All these people are telling me about it. I guess that's the one I'm going to bet on. So I guess that would be the thesis.
Also, here's the other thing that I heard, and I actually do believe this. Like, apparently, a lot of people think that the bonk phenomena, like the Let's Bonk and then the bonk runners, are completely inorganic, and I believe that. I imagine, and so the theory is the reason that Let's Bonk is doing really really well is that they graduated some of these $1 billion plus new meme runners, and that these new runners were basically fabricated, and so that's commanding the attention and thus the money and revenue for Let's Bonk is from, like, what is it, Hosco and whatever the hell Bonk.
So you're saying that Pump looks artificially bad. It doesn't. It's the situation for Pump isn't as bad as what it actually is.
Well, no. What I'm saying though is that these meme coins are probably like mostly cabal coins, and so all Pump has to do to get back in the game, or whomever wants, they just have to create some new meme coins that run, i.e., force it to happen. Basically, you know what I'm talking about?
Yeah.
And so again, there is no moat, but that means
Yeah.
there's no moat. There's no moat for Let's Bonk either, and so Pump can also.
They've got over $1 billion of war chest to deploy here. So if they
Closer
come up
to
with
two,
some
apparently.
grand idea for how to pump, then they have the means to make it happen.
Yeah, and thus the token, the token would probably pump. The token would pump on that, right? Like, look, see, they've returned to the spotlight.
Yeah, and just like talking about this right now, you could see how pumping could catch on just because it's so catchy to say pump is pumping. So I don't know, just that alone if things get wild, yeah, it's worth I don't know, couple bucks. Throw a couple bucks. All right, let's wrap it up there. Put your real money in the Bitcoin.
Yes.
Speculate on the pump, and we'll see you next week on the Weekly. Thank you for listening. Thanks, David. See you guys. We're out.